Let's see how Tesla has been going today. So we closed at 257.02, up $2.75. This is approximately 1% up. Let's take a look at what this means on the chart. Here we definitely have some resistance. We cannot go higher than 257, and we closed the day at the top. We closed the day at the top. This is a good sign. Let's take a look at the 1-hour chart. So on the 1-hour chart, look at how perfectly this channel is working. This channel is working. The stock is respecting our channel. There's a little bit of resistance right here. I'm going to put the resistance at the top of that wick right there, 257.19. So 257.19 is what we have to break in order to continue. So this is a temporary stop. We also have, we have a bunch of resistance. Resistance are going to come into play. We have a resistance at 260.25, an intraday resistance. But the big resistance is at 265.32. Right now, if you enter at the buy right here, you are in the money. You have money on paper. And then you need to manage this trade. Buying at the right time is easy. But then what do you do if it starts to cave in to 265.32? If you are more short-term oriented, you can sell at 265.32 if it goes up there. You can sell there and you keep your money, and then you find another opportunity somewhere. If you believe in Tesla a little bit more long-term, then you might be able to suffer a little bit of a move down, like I explained yesterday. Switching to the 1-hour chart can be interesting because this is going to tell us when Tesla is going to reverse. Right now, it's going higher. And also right now, right here, we are in a congestion zone on the 1-hour chart between 250 and 257. So it's possible that we get outside of this bullish channel and stop and continue zigzagging between these two lines. And if we continue zigzagging, of course, you can decide to sell at any point. Or you can, as I said yesterday, you can wait on it and see if we are not going to continue after a congestion zone. If we start going lower than 250, it is going to go below 50, then this is going to mean that we are going to have a move down. So we could be having a move down until 240 something, and then hopefully we are going to bounce on it. Before this bounce, we are going to have a small or big congestion zone, and then this is going to be our signal to get back in again. So this is one way of doing it, and there are many other ways of doing it. And I am not a day trader. I don't sell just because I don't tend to sell because we are just going close to resistance. If we go close to resistance, we could be continuing. So I tend to wait and see what is going to happen and let some room to the stock to go higher. Also, right now, this is the moving average. This is the moving average, and we are getting away from the moving average. And eventually, we are going to catch up to the moving average. Either the moving average is going to go higher and higher and then catch up to the stock if it stays into the congestion zone, or the stock is going to come down to the moving average. But in any case, we have this gap that is being created between the stock and the moving average, and this gap is going to be solved at some point. We have that all the time. Here, we have the stock right smack on the moving average, and then boom, we started to get away from it. And the moving average caught it, tried to catch it, and it caught most of the move. And then we kind of went the other way. The stock went away from the moving average and came back. So, there's a rubber banding that's happening right here. Let's now take a look at the rest of the market. VIX is pretty much going sideways. We are up 0.02. This is nothing. We are at 1540. This is great. If we stay there, the stock market is supposed to continue going higher. We have some important information that is going to come tomorrow morning. We have the durable goods orders month over month. This is an economic indicator. New orders for manufactured durable goods in the US surged by 9.9% in the previous month in July of 2024. making up for the downwardly revised 6.9% decline in the earlier period. So this was in June. So this number is going to be quite important. Depending on this number, this can impact the stock market. So, we could be having a move down. If we have a move that's significantly lower, we have the consensus at 2.6% and the forecast at 2.2%. At 7:30, we are going to get this number. In terms of gross domestic product growth rate, quarter over quarter final, this is the current trend that we are in, and the expectations are that we should be at 3%. We should be at 3%, so we'll see what happens. So this is going to come at 7:30. This is before the opening, so look at the VIX to see what is the potential impact of that. Also, we have at 8:20 a.m. before the opening, there's a speech given by Jerome Powell. So this might also impact what is going to happen tomorrow. Let's take a look at the stock indices. So Dow Jones, we have a little bit of a caving in. That's to be expected after a move up. Nothing too serious here. S&P 500, also a little bit of a caving in, still above support, so we cannot complain about that. And NASDAQ, look at this. NASDAQ, we have the close above 19,938. This is bullish for NASDAQ. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.